Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. Well, Elon Musk has another job. President-elect Donald Trump has named the world's richest man to head a budget-cutting commission on government efficiency. Eamon Javers has the story.
If you're talking about cutting $2 trillion, you got to look at the whole kit and caboodle here.
How is business gearing up for a whole new Washington? Former Republican House leader turned Wall Street exec Eric Cantor.
We see activity, dialogue is strong across sectors now, and I think a lot of it does have to do with just the sentiment that came with this election.
Plus, Cava on a tear, the fast casual Mediterranean-style restaurant blowing past the street's expectations. CEO Brett Schulman on demand for what Cava's serving.
Our goal is 1,000 restaurants by 2032, which basically implies a 15% plus compound annual unit growth rate.
It's Wednesday, November 13th, 2024.
Can you define caboodle? Do you know what a caboodle is? What the hell is that?
Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin.
President-elect Trump announcing more picks for key roles in his administration. Eamon Javers joins us this morning from West Palm Beach, Florida, with a whole bunch of new names.
Yeah, that's right, Andrew. We got some insight into President Trump's thinking about how he wants his second term to go last night with all these announcements. Let's start with Pete Hegseth. He's the Fox News anchor who the president-elect announced last night. He wants to serve as his Secretary of Defense. He served in the Minnesota Army National Guard. He served 2 tours in Iraq and Afghanistan. He's the co-host of Fox and Friends Weekend. It's going to be an interesting, unconventional pick, and you will follow along in Washington to see whether he has the votes to get confirmed. Your instinct is he does have the votes to get confirmed in a Republican Senate. But Pete Hegseth has never run a large organization, never worked in the Pentagon, so definitely seen as somebody unconventional. He's known on Fox and Friends for crusading against what he sees as wokeness inside the U.S. military and a real critic of gender and diversity and inclusion efforts by the Pentagon. So he's somebody who is simpatico with the incoming president of the United States on woke issues. That's the Department of Defense. Now, let's move on to Elon Musk and Vivek Ramaswamy, the former president, announcing last night he wants to create a new Department of Government Efficiency. You see it's DOGE. You see what he did there with Dogecoin. Elon Musk and Vivek Ramaswamy would co-head this new organization. Take a look at what the former president said last night in his announcement about this organization. He said it's going to exist outside of government. He said it'll provide advice and guidance from outside of government and will partner with the White House and the Office of Management and Budget to drive large-scale structural reform and create an entrepreneurial approach to government never seen before. So the key there, guys, I think, is the outside of government piece. This is not something that's going to have the force of law. It's not going to have the backing of Congress, at least initially, as it's described in this press release last night. And that means it won't have the actual authority to make cuts. So think of this as more like a blue ribbon commission along the lines of Simpson-Bowles back in the 2010s, where they're going to recommend cuts, and then it'll be up to Congress to implement those cuts. And Congress, of course, has its own preferences about spending. That's why Simpson-Bowles failed in the end. It's because they couldn't find political agreement about the right balance between tax increases and spending cuts. In this case, though, both Elon Musk and Vivek Ramaswamy have suggested that they want cuts that go far beyond what Simpson-Bowles ever contemplated. Elon Musk talking about cutting $2 trillion out of the $6 trillion federal budget. Vivek Ramaswamy talking about cutting 1 million federal employees. And he's argued that he has a way of doing that cut which works around the civil service protections for existing federal workers that prevent them from being fired. His argument, and he's willing to take this to court, he said in the past, is that you can do reductions in force at a large-scale level inside the federal government. And if you do that, then you get around the civil service protections. He's willing to take that all the way up to the Supreme Court. And the Supreme Court might back him on that, given that it's a very conservative court at this point, guys. Back over to you.
So Eamon, in fact, it appears that this effort by Elon and Vivek is going to be much broader in some ways than I think some people had expected, in that the recommendations may encompass all sorts of parts of the government that couldn't otherwise be touched or will require Congress to touch it. I think there was an early expectation that he might be brought in, this is Elon, and try to touch those component parts of the government that could be touched using executive orders and the like, right?
Yeah. No, this is clearly a whole of government effort. I mean, if you're talking about cutting $2 trillion, you got to look at the whole kit and caboodle here. The problem is politically, right? I mean, the reason that these kinds of efforts to find waste, fraud, and abuse typically fail in Washington is that, one man's waste is another man's essential government project, right? And somebody benefits from every single dollar that the federal government spends. All those people who benefit have their voices in Washington, have their representatives who speak up for them, who argue for that particular piece of spending. Every dollar has a constituency. And so the more you try to cut, the more political enemies you make. The interesting dynamic here is just this sort of total sweeping victory that Donald Trump had in the election, the popularity and dynamism of figures like Elon Musk and Vivek Ramaswamy. These are interesting, fascinating, social media popular people who are going to come in and approach this in a totally different way. That might get sort of momentum of its own to get Congress to buy into a lot of that. But at the end of the day, you're going to talk about cutting spending in individual members of Congress's districts that affect their constituents. And a lot of those folks are not going to want to take the political pain from that.
Although, Eamon, by doing it this way, it also means that both those gentlemen can continue to work in their day jobs and hold the corporate holdings that they have, continue to keep those. If you work for the executive branch, you have to divest all of those issues. And that raised a lot of questions, too.
Sure.
What would happen if Elon Musk wasn't still able to run all of his companies? So I think this answers some of those questions, too.
I mean, Elon Musk has been in public fights with a number of federal regulatory agencies, and now that could happen at a time when he is proposing to cut the budget for the SEC, say, or the FAA, or any kind of other large government agency that he's tangled with in the past. I mean, that raises just inherent conflicts of interest issues. And one of the questions here is going to be, what kind of authority does this, new quote-unquote department have? It'll be an outside of government advisory board that will make these recommendations. Presumably the president-elect, as president, will take on board some of their recommendations if they come up with ways to actually cut the federal budget through executive orders and the like. But at the end of the day, you're going to need Congress for this. And members of Congress generally don't like, cutting spending that benefits their own constituents.
But again, we watched the internal process, trying to do it through Washington insiders with Simpson and Bowles. In the end, they made a lot of recommendations, but they weren't able to be effective with it for those reasons. Maybe if it's coming from the outside.
That would have been, they needed legislation for that.
I think you will for this, too.
They did.
I think you can do something.
And they didn't get it, right? Because there was not enough agreement.
Right.
And then the $2 trillion, is that over 1 year, over 10 years? Do we know the answers to that yet, Eamon?
I mean, we don't know ultimately what he's going to do, but he's talked about, it's a $6 trillion annual budget, and he's talked about cutting $2 trillion out of it. I mean,
first 100 days,
you can't do that unless
that's the entire discretionary budget.
Yeah, I mean,
plus.
you can't do. Right, it's bigger than the entire, exactly. Right, yeah. I mean, and the president-elect has said that he doesn't want to cut, some of the mandatory
Social
spending,
Security.
like on Social Security, Medicare, Medicaid, those things that benefit
you can't
people
cut $2
and
trillion
particularly his
without
voters.
in 1 year without getting into that.
You got to get to the bone.
Yeah.
And
I mean, you cut the entire
much
Department of Defense budget.
You cut the bone.
Right.
Eamon, I guess we got to go. I'm just wondering, can you define caboodle? Do you know what a caboodle is? What the hell is that? I mean, you use that
I don't know
word.
what a kit is either, actually.
A kit is a collection.
Caboodle.
A kit is a collection of things.
I thought a kit was that's a kid.
It's
I'm thinking
both.
Of a goat, baby goat.
It actually, if
I
you
thought
ever
a
on
caboodle
Jeopardy,
was the last car on the train.
Yeah, no, I know. It's actually from, I guess, the Old English for bottle, B-O-T-T-E-L, which is a collection of things. And just to make it alliterative, they added caboodle, kit and caboodle. That's apparently how it came about.
Using your noodle.
Using your
This is
noodle
why I come on this
to
show,
find
Joe.
out what kit and caboodle. You know what, Eamon? If we use it, we should probably know what the hell we're. I just decided. I go, what the hell is a caboodle?
I don't know.
It's a funny name. It's a funny word.
Because of these discussions that you've started and got into, I cringe. I cringe every time somebody says "chomping at the bit." It's champing at the bit.
It is. It is.
Now I can't hear it.
I really think I should do it. The Boomer Report, Eamon. You're almost there. Not quite, but you probably like it.
I'm solidly Gen X, man.
Yeah, are you? Solidly Gen X. Gen
Kurt
Triple X.
Cobain is my
Gen
hero.
Triple X, I think. Amen. No, don't cut yourself
I don't know
short.
about that.
All right, thank you.
Food startup Wonder is buying delivery service Grubhub from Europe's Just Eat takeaway. Wonder's going to be paying $150 million in cash. It will assume $500 million of debt. Just Eat Takeaway bought Grubhub in a 2021 deal that valued at more than $7 billion. Of course, if you've watched the show, you probably know that Wonder was founded by former Walmart executive Mark Lorry. He's a former internet entrepreneur who created Diapers.com and others. This was founded back in 2018. That company is building out kitchens that house multiple restaurant brands with dine-in and delivery options. The combination will allow Wonder to tap into Grubhub's fleet of delivery drivers and help it create a meal supertime app. We're showing some of these vans. I think originally the idea was it was going to be vans that drove to your house and made the dinner for you fresh there. They got away from that. They're into this idea of like these super restaurant locations where you can dine in, but most of it's for takeout. But they only do takeout from really big name brands and good food in a small circle because they want the food to be warm when it gets there.
I mean, I understand Uber Eats. I don't understand sending the whole kit and caboodle to your house.
Well, we were showing the vans. That was their
That's
early
just-
concept. I don't think that's what they're doing now. They've gotten away from it because it's expensive, and you could only do that. Remember, they were starting that out by your house in really ritzy areas.
Should see all the leaves in leafy Short Hills. It's very verdant. They always call it that leafy.
I think he must
very
live out
leafy.
there. He must live out there because that's where he was starting the service.
It's even if you get a meal made for you by the staff away from the main part of. We've done that on the beach once. Staying at a Ritz-Carlton or something. It's like you can't afford it. You can't.
Yeah.
It costs too much.
I think that's what they learned.
Bring the food to me. Don't bring the prepared.
And that's what they've learned. I think we're just using old video.
Did you think Kit and Caboodle worked there? I think
it was good use.
I think it was really good.
Yeah.
The whole kitchen sink. Okay, where's that from, Sorkin? The whole kitchen sink. Where is that from?
Now I think of Elon Musk with the kitchen
But
sink.
where is
so
it
I don't know.
from?
Let me see.
Where is it from? Why the sink?
Tease will be next.
Dates to the early 1900s.
And why the sink? We don't know.
I don't know. Haven't gotten there yet.
Coming up, the test of Trump's dominance from cabinet announcements and the meme-sounding Department of Government Efficiency,
DOGE.
to the first choice for a new Republican Senate leader in nearly 20 years. Eric Cantor, who knew his way around Capitol Hill as Republican leader in the House and now works for the M&A shop Moelis & Company, joins us next.
We're going to have now a much more sensible regulatory outlook, and it matters. Incentives matter to business, to investors. It just does.
Welcome back to Squawk Pod from CNBC. Here's Becky Quick.
You are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin. And among today's top stories, President-elect Trump tapping Elon Musk and former presidential candidate Vivek Ramaswamy for what's being called the Department of Government Efficiency, or DOGE for short. That initiative is expected to work outside government to provide guidance. Members of Congress will probably end up getting a say on any recommended spending cuts.
A very busy day ahead for President-elect Trump. He's going to be meeting with President Biden at the White House this morning. That's supposed to happen at about 11 a.m. this morning. Then House Speaker Mike Johnson also expected to meet with Trump. And we'll be finding out about the leader that the president-elect will be dealing with in the Senate. Hopefully we'll learn that today. The race to succeed Mitch McConnell is set to conclude today. Joining us now on all of this, former Republican House Majority Leader Eric Cantor. He is now Vice Chairman and Managing Director at Moelis & Company. Good morning to you.
Good morning. Great to be here.
It's great to. I want to hear all of your thoughts about how this is going to impact business, but just to the extent that we were talking about what's going to be going on in Washington today, do you have a gamble here on Thune? Do you have a view about Rick Scott and everything that's going on there and everything else?
I think the real uncertainty comes in the fact that there is 27 being I think the magic number that one has got to acquire in terms of votes, and if Rick Scott's in there, he could be the spoiler where they go to a second round. So I think that is my sense, kind of looking from the outside. And in these leadership races, typically, even in the House, outside forces don't really make a lot of difference. And let's see if we're in a new era now, because I do think that
Even when the outside force
is Donald Trump.
Is Donald Trump,
Yeah,
right?
I mean, that's what I'm saying. It is, the fact that there have been protests, from what I read and hear, on at senators' offices in their homes. I mean, that is new stuff. I mean, because it's just
Trump
not.
hasn't said anything.
No, but Elon Musk has, and that's
right. I mean, I think there's a clear signal being sent, but I think also Trump realizes, this is has always been an insider's game, and not sure he can really influence it, because at the end of the day, it's a secret ballot. So now, how secret it is after the vote?
Yeah, well, there have been a couple of senators who have said that they're going to vote for Rick Scott.
Well, I mean, like somebody like Marco Rubio, but that's understandable. It's a fellow state, senator.
Tennessee is close enough.
And he's now part of the cabinet.
We just had Haggerty on.
Haggerty said it.
Haggerty.
Right,
Lee
right.
said it.
And there's also people vying to be a part of the administration, and there's a signal that's been sent. So I do think that, we'll see how it plays out. My gut is it will stay where, in the sort of more traditional lane.
Really?
Talking about this administration, by the way, on the finance end of it, I assume you were spending a little bit of time trying to figure out or think through who may ultimately be the Treasury Secretary, who may run Commerce.
It's a very
who's on your list?
It's a very well. Listen, I think what President Trump has demonstrated is not too dissimilar from what has gone on traditionally with modern day presidents. I mean, they want people who are loyal to them. They want people who can execute on their agenda, and that's exactly what's happening here. And so I don't think it's so outlandish, this process. Now,
but do you think we're talking about Lutnick? Do you think we're talking about Scott Bessent? What's the...
I have no ability to see in as to who's really in the lead right now, but I think there's one thing clear, that we are about robust growth, and that's where the focus is going to be.
Are you absolutely sure it's going to help your business at Moelis? I'll tell you why I'm thinking about Peter yesterday, Orszag, who now has a real job. He's like Lazard. Right. It actually matters. What he was in a good mood. I swear to God, he looked like he was in. It didn't go the Democrats' way, but I almost said to him, "You are happy. You are happy."
A reluctant acceptance of the fact that.
But if you're in a business like Lazard, it's going to be better for you.
Listen, same thing with Moelis. What we have seen is, typically in my short time on Wall Street, that's getting longer now, is that that typically Washington is a side deal, right? And it's people are figuring out how to work around it. But I do think that over the last sort of 6-8 weeks, there has been a real pause to see what's going to happen. And now, we've all seen the return to some of the market of the sponsors now. We've all seen, sort of people now, I think, a breath of fresh air on the regulatory front, because you think about the changes that are in store at the FTC. There was nobody like Lena Khan, and I think it was more individually driven with support from the Biden White House. That will be gone, and we're going to have a much, I think, more clear visibility on what regulatory prospects are in M&A. I mean, yes, Trump has been and was a little bit active in that, but I think it was isolated.
So in terms of where that deal activity comes from, besides, by the way, just going to, there's going to be a lot of great fees that are come to the investment banks, and you're seeing a lot of the banking businesses that are public fly on the back of that news. So that we know. The question is, you look at some of the smaller banks. Do you say it's going to happen in financials? Because we have 4,000 banks in this country. They're going to come together. Do you look at energy? Do you look at, by the way, clean energy? There might be some companies that are going to actually struggle that may need to merge for other reasons.
100%. I think all of the above. I mean, we see, activity, dialogue is strong across sectors now, and I think a lot of it does have to do with just the sentiment that came with this election.
What about big?
Why are you pointing at me?
Okay. What about?
Because I think you are in agreement that we're going to have now a much more sensible regulatory outlook. And it matters. Incentives matter to business, to investors. It just does.
Big tech being able to make acquisitions. Do you think that's in the offing? Because that's been one of the places where it's been less clear that even in a Trump administration, if Apple, if Google, if Amazon wants to make a big acquisition, or even, by the way, frankly, a small acquisition, that it is challenging. I ask, by the way, because there's even questions about whether they should be buying media companies, for example, and the like.
Look, I think, first of all, it starts with the Trump administration has individuals there who are business people. That is very different from what's in the administration now, where you have ideologues, you have academics, and they have never been on the side of trying to make a decision, run a P&L. So you start there.
Right.
And I do think that when you look at the overall discussion about M&A and the option of M&A for a founder, for someone like who sits in Silicon Valley, many of whom now are very favorable towards a Trump regulatory framework, M&A is an option, right? It's an exit option. It helps our economy and its dynamism and the flow of capital to its most efficient use. So, yes, I think overall the sentiment has shifted. Who knows in particular instances? Because
no, the reason I asked though is you do hear occasionally, even from President-elect Trump, about Google to say, I want fair trade. I don't want to break up the company necessarily. But then I wonder about, for the last couple of years, you've seen OpenAI make these partnerships with Microsoft. In a more normal world, Microsoft might have bought an OpenAI, right? And Anthropic might have been bought by an Amazon or a Google. Right. And whether those type of things can happen in this new universe.
So listen, I think that
whether they should is a different question.
Right. I think, again, there will not be this construct that Lena Khan, Jonathan Cantor, and ultimately it was Elizabeth Warren who went and enabled these individuals to go sit in those seats and adhere to a framework which was completely anathema to what M&A is about. So I think we've turned the corner on that. We're going to see a much more, conventional or traditional approach. I'm not saying that you're going to have, concentration of power that is going to squelch competition. No. So.
We got to go. I just have one last one for you. Different, but Pete Hegseth, who is now going to be up to run the Pentagon. Yeah. I don't know if you want myself or Joe or Becky to run the Treasury. I mean, I guess we could.
I know a little, but I'm not ready for Treasury.
We just do we just play it on TV. So the question.
Exactly.
Well, listen, everyone at this table has been to a respectable, has respectable education and background.
Oh, and by the way, he has got a great background.
Princeton and Harvard.
Right.
Super smart.
But I'm not holding that against
Afghanistan.
him. He is
right.
You're not holding. I would assume you would hold that against him.
I'm not holding that.
Not the traditional
He burned
route.
his diplomas
It
on
is
Fox.
an interesting pick, again, and I go back to my original statement. In modern day, presidents have insisted on loyalty. Yeah. I think that what we're in store for in this administration is one that's being heavily driven out of the West Wing. I think when you look at not just these appointments, but even in execution, it will be very driven. And I think the president's entitled to that.
He has 2 bronze stars.
I want to thank you. I want to thank you for being here. Appreciate it.
So, thank you.
Our producer thinks you actually have bought a kitten caboodle for your cat. It's like a sweater. A kitten caboodle?
No, I have not.
That would be a good name for.
My cat would not like it.
If you were a clothier for cats, kitten caboodle might be good.
That is a good name.
Might be a good name.
Yeah.
Coming up, folks. I don't know where to go with this.
Next on Squawk Pod, fast casual restaurant Cava has seen a stock surge of more than 400% since its IPO last year. We talked to CEO Brett Schulman.
I actually said to the team, look, this is not the destination, it's the next chapter in our journey. And if we keep our heads down, focus on our mission to bring heart, health, and humanity to food, that over time, that stock price will go up and it will take care of itself.
Squawk Pod will be right back. You're listening to Squawk Pod with Joe Kernen, Becky Quick, and Andrew Ross Sorkin.
Up and Andrew, Q.
Take a look at this because shares of Cava, they are surging just this morning again, and they're up more than 400%. You ready for this? From last year. You probably wish we told you that a year ago. Or the fast food chain reported stronger than expected third quarter profits and revenue, raised its full year guidance. Same store sales jumping 18%. Talk about a growth story. Joining us right now to break down the results is Cava co-founder and CEO Brett Schulman. Dare I ask, do you look at the stock price? What's going on? No, like inside the head office, I assume there's a lot of smiles.
Well, we tell the team stocks are going to go up and down every day. And the night before the IPO, I actually said to the team, look, this is not the destination, it's the next chapter in our journey. And if we keep our heads down, focus on our mission to bring heart, health, and humanity to food, that over time, that stock price will go up and it will take care of itself.
Okay, so talking about taking care of itself, what is the growth story from here? Because that is the big question. Obviously, there's folks betting that the growth stories can continue apace. But, when you see a stock move as far as it's moved, there's others who say, can this keep going at this rate?
Yeah, well, first I want to give credit to our 11,000 team members strong who deliver on that mission every day to bring heart, health, and humanity to food. Our goal is 1,000 restaurants by 2032, which basically implies a 15% plus compound annual unit growth rate. This year, we've been able to exceed that a little bit. We raised our guidance to 56 to 58 new restaurants, so closer to 17, 18%. And we gave preliminary guidance for next year of at least 17% plus, given the health and strength of our real estate pipeline.
When you look at 1,000 restaurants and what that looks like, I mean, there is a moment oftentimes where you get into this kind of period where people start to question whether you're cannibalizing business at other restaurants. Yeah. What is the magic number where it gets a little bit more complicated for you?
Well, we see that runway extending every year, and I think the thing that gets us most excited, and I think has investors excited, is we have so many ways to win. When you look at the broad appeal of our Mediterranean cuisine, the consistency of performance across the country, whether it's Bryant Park here in Manhattan or Back Bay in Boston or Mobile in Alabama, or we just opened in Miriam in Kansas. And then when you look at the top decile of our restaurants, it's everything from a suburban shopping center that we have an end cap location, ex-urban small town with a pickup by car drive-through digital lane, freestanding building, a college adjacent site, or an urban location with residential. So it allows us to cast a wide net without cannibalizing existing locations.
Hey, Brett, we did hear about you pretty early on from Steve Case when he was here.
Yeah.
He and Ted Leonsis, I think it was maybe Ted who brought it to Steve, I think, if I'm remembering this correctly. But they identified you really early. And it's great food. It's healthy. You feel like you're eating well when you're getting it.
Right. Spicy.
Yeah, it's good. It's good food.
Got
but
it all.
What's the moat that keeps others from copying you? Is it getting big enough that it's too hard to take you on?
Yeah, so we believe we are the category-defining brand, and we are in many ways creating the next major cultural cuisine category in Mediterranean. And over the years, we've invested in significant infrastructure. So whether that's our, over 90,000 square foot of production facilities where we make our fresh dips and spreads. So just like my co-founder chef Dimitri used to make tzatziki back in the original Cava restaurant that Ted Leonsis used to go to, with fresh dill, fresh cucumber, but now we're making it in large-scale batches, taking that complexity out of the four walls of our restaurants and delivering it to you with the quality, consistency, and cost-effectiveness that we're able to produce. And then our technology investments, our digital order ecosystem, and most importantly, our human capital investments, our people and our culture that we've built this brand on for the last 14 years, delivering that Mediterranean hospitality and that Mediterranean cuisine.
What kind of pricing power do you think you have right now, and what's happening in terms of food costs and the like? We keep talking about inflationary pressures.
Yeah, well, we see about low single-digit inflation on the food, beverage, and packaging side. But I think what's been interesting is as we've been able to leverage this model, so it's a very powerful unit economic model. You think of the walk-the-line format as the assembly line production model. So very productive from a labor standpoint, allows us to invest in food quality and invest in our team and invest in our guests. So if you go from the end of 19 to the end of 23, we only took price about 12% during that time period when CPI was up almost 18%. And the Department of Labor noted fast food was up over 30%.
Right.
At the same time, we've been able to expand restaurant level margins. So this year we only took less than 3% price. Again, trying to invest in our guests. And I think that's what you've seen drive the traffic growth. So we think we have pricing elasticity, but we're not necessarily looking to take it just because we can.
What percentage of the business is now walk-in versus pickup via mobile?
Yeah, I think this is really interesting. So, we've been taking a bit of a contrarian point of view where we think the demise of the dining room is greatly exaggerated, but that it's not an either or, it's an and. We have great digital convenient channels, which about 36% this quarter of our revenue came through those channels. But we have great physical experiential channels where you can walk down the line, have that interactive experience, and share a meal in our dining rooms. And that's about 64% of our guests.
Do you see those as at odds? The reason I ask is that I think it's one of the great challenges Starbucks is now faced with, right? They've had such success with the mobile ordering, but as a result, you walk into those stores, if you are like a second-class citizen in some cases, because if you order it online first, you're winning the sort of competition of who's going to get the attention of the barista. How does that work where you guys?
Well, I think that's why you've seen the growth of fast casual as an industry for the last 20 years, and you've seen other segments like legacy casual dining shrink because our format and the way we're oriented with our physical spaces is able to deliver both those digital and physical channels without creating a lot of that friction. I think brands are trying to figure that out in many different ways, whether leveraging technology, automation, or the design of their restaurants to be able to basically what we've tried to do is create a multi-channel format and give you the control of opting into your channel of choice depending on what your need state is and where you are in that moment.
Brett, I want to thank you for coming in this morning. Congratulations. It's been a hell of a run.
Yeah, thanks for having me.
Thank you.
Thank you.
And that is the pod for today. Thanks for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern.
It's a 3-hour show.
3-hour tour.
Get the best of our TV show right into your ears when you follow Squawk Pod. Follow this podcast wherever you listen. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.